In high seas or calm, both opportunity and risk lurk just below the surface. Answers require in-depth analysis. Welcome to BlackFin Group's Shark Cage podcast, where experts dip below the surface of important industry issues in search of hidden opportunities.
Good day, folks, and welcome to the Shark Cage BlackFin's podcast series. My name is Keith Kemp, President and CEO of BlackFin Group. I will be your host today. To start, I really want to thank our sponsors. A special shout out to all of BlackFin's preferred partners, LoanPass, Mortgage Flex, Constellation Mortgage Solutions, Flowify, CloudVerga, LendingPad, and today's very special guest, iEmergent, and many, many more who are all doing great things for the industry. So let's get started on today's topic. Today, I'm really excited to have in the Shark Cage one of BlackFin's preferred partners, Laird. She is the CEO of iEmergent. But just before we get into discussion, I really want to take a few minutes to formally introduce Laird by sharing a little bit about her background. I think a lot of us can relate with her success in this industry. But for over 10 years, Laird was the CEO of Mortgage Market Smart, a lender analytics application, before also taking the reins as CEO at the parent company of iEmergent in 2014. Throughout her career, Laird has had a passion for housing equity and has spent countless hours collaborating with housing affordability working groups, which has made her one of the industry's most sought after speakers on serving diverse markets. She currently sits on two committees for the MBA's Convergence Columbus program and is a national partner with the MBA across its broader convergence initiatives. In a growing category of market intelligence providers, she has set iEmergent apart with its ability to provide lenders with a unique prism of historic, current, and future-focused demographic, economic, housing, and competitor data as at both the macro and the micro level. I mean, it's just absolutely impressive what kind of data they're making available. And really, she's continuing her father's opportunity-driven message that has been foundational to iEmergent's advisory approach and product development efforts. At the end of the day, helping lenders both do more loans with the iEmergent data that's available and ensure housing diversity is achieved. Laird, absolutely impressive background. Love your product and services. Thank you for all you're doing to ensure homeownership equity. I look forward to really digging in a little bit deeper here today, and welcome. We're just glad to have you.
Well, thank you for having me, but also thank you for that wonderful introduction. I thank you very much. I'm really looking forward to today's conversation as well.
Yeah, likewise. No, we're going to have fun and look forward to going deep and wide on a lot of these different discussions because you guys are really touching a very sensitive part of the market. And so we'll just go ahead and jump in there. Before we really expose the amazing origination opportunities available at lenders today, I mean, literally today, through data sets like what you're doing at iEmergent, I know we both agree that diversity in the U.S. homeownership market is really an issue. Why is that, Laird? Can you take a minute to help our listeners understand why we have these issues or gaps in our market?
Sure. Well, it actually goes back decades. And as much as I would like to say that things have improved in the last, 50 years, the data don't really show that. So what I'm going to first talk about before we get into the opportunity, I'm going to talk about why there are these problems. Obviously decades ago, the federal government, the history, early beginnings of redlining really came from the Home Loan Corporation, trying to create neighborhoods that had more value for the original investors. Obviously, over time, we've tried to get away from redlining, but the reality of the matter is that by redlining, we created generational differences in knowledge about home ownership and fundamentally generational differences in wealth. So you add that in with, other issues of racial equity and discrimination, and it's become, I think really a growing problem because as time's gone on, more generations have been impacted and slowed down. I think that the reason, though, that we continue to have these gaps is, and think about this for a second. So, the we define a word called, we call the homeowner pool. And the
Uh-huh.
homeowner pool really are the households that are ready, willing, and able to buy a home. Okay. Well, the face of the homeowner pool, just like other demographics in the US, is changing rapidly. For example, more than 77% of net household growth, it projected over the next decade, will come from households of color. Okay. So that's just incredible growth we don't see for non-Hispanic white people. Um, the challenge, though, is that if you look at the numbers also show that the racial homeownership gap has widened. So in the 1960s, the gap was, 26%. Well, 60 years later, it has widened to 29%. In some markets, like in Minneapolis, for example, the difference in the homeownership rate for non-Hispanic whites and for Black homeowners or households is actually greater than 50%. So that's just an incredible difference. Why I think that's a problem is because that even though things have changed, how we do, what the market is, the target market for lenders has changed. We haven't done a lot, and the data clearly show this, to change the status quo. And that's what I believe is one of the issues. And we've built we call the status quo and the new paradigm, that if you really look through it, like 6 different fundamental pieces, I believe that a lot of the opportunities that lenders have to capture tomorrow's opportunities come by really changing the way we do things. I mean, I think the bottom line is, when things change, if you don't, what you've always been doing isn't going to keep working. And I think that's where we are today. Now, why is this such a big issue today? Part of that is because if you think about it, I'm going to use my hands for a second. Our greatest um, opportunity really in this shrinking market is for this growing segment. And yet we see that home ownership gap widening. So that difference, that's a problem. That's a business problem for lenders, in addition to being a social problem. I think you take those issues and the fact that this administration has a much more equity proactive approach. And in my opinion, it's like perfect time to really start addressing this issue, because it really allows for the win-win-win. It's a win for lenders because they have fewer regulatory issues and more business. It's a win for communities or households. It's also, an overall win for communities. And so we're looking at that. We call it the trifecta: the business trifecta, the community trifecta, and then the regulatory trifecta. I don't see much reason for not talking about it now.
Yeah, that is tremendous. And those numbers are absolutely staggering. And part of what I'm hearing based on those numbers and trends uh, 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 is that it's a little bit of a warning shot, actually, to lenders today, that if they don't start to find ways in order to lend in increase their diversity lending game, find those target markets, leverage the data and insights that you guys are providing, they're eventually going to lose, because if that's where a
100%.
majority of the business is going to be, then you've got to go toward that market. You can't run away from it, or you can't just ignore it, because you're going to be outproduced by those lenders that realize the greater opportunity in today's market.
Oh, that is, you said that perfectly. I mean, I think it's, really sealing your closing the coffin on you if you're not thinking about those things. And one of the reasons for that is, and one of the things that we like to say is, if you're thinking about where tomorrow's opportunity is going to be, you need to be building and executing strategies today so that it's ready. And one of the key pieces of that new paradigm that I think has challenged, the industry, is that it's been very reactive, particularly reactive in terms of how the industry looks at this, diversity data. We all wait for HMDA to come out to see how we did. Well, we're kind of throwing that aside and saying, you know what? If you really want to make this work, we need to start being proactive. We have to be driven not by risk, but by opportunity. And, like, for example, if you think about a lot of the ways that strategies have been built, for the last 10 years, on this topic, there is, you've got your sales team, and then you have your diverse markets team. while I love that there's a focused team, at the end of the day, sales and diverse markets should be one and the same.
What?
It should be central to the strategy, not peripheral, right?
Oh, I
And
love the way you said that.
the other pieces of that are, if you look, and there's evidence of all of this. If you look at some of the strategies, we work with some of the largest lenders, and they have a strategy for diversity. Well, the challenge with that is diversity is very diverse in itself, right? And what's also really diverse are different markets. I do a lot of volunteer. Well, we do a lot of deep dive work into markets across the country, and particularly late, I'm doing a lot in Memphis, Columbus, Philly, Seattle. All of those markets are drastically different. And I guarantee that having the same strategy in one, that strategy is not going to work in another. And so that's where we're suggesting, instead of having generic strategies, you have to have targeted strategies. Okay. Another one of those key pieces is the idea of, instead of using static data, let's look at that data dynamically. So that's not like okay, I consume data and then I make choices. This is about that constant interaction of data. I'm going to look at it. I'm going to do something. I'm going to use it. Then I'm going to give more data to the issue, and it's going to keep being dynamic because, this is a dynamic industry. It changes constantly. And then the last piece is just that whole, well, actually, it's my favorite piece. It's the difference of being, kind of a one-sided approach to strategy. Like, for example, compliance tells sales what to do with diverse markets. You know, uh, uh, financial institutions go into communities and tell them what to do. It's like, here's nonprofits, here's for-profits, here's government. What we're suggesting is to overhaul that and have a collaborative approach. And that's not just from the sectors. That's really saying, by collaborative, we mean, let's talk about compliance and sales working together. Let's talk about, these different parts of the community working. Let's talk about moving from, realtor based strategies to thinking about, how do we work with the hospitals, with the libraries, with the schools? How do we just become more collaborative in nature and work on a problem that, at the end of the day, impacts every single lender, in the industry, and not just lenders, it's realtors, it's, anyone that's associated with housing is dealing with these very, very complicated, multifaceted issues. So it's not easy, that's for sure. And
Wow.
in no way am I saying it's a quick prescription.
No.
But
No,
I
but
think
what I really hear you saying is, in order to really tap this burgeoning and I mean immediately available market with more aggressive diverse lending, is you can no longer just be the mortgage producer that you have been for the last 30 years, which is heads down looking at loans on a 30-day basis. And you've got to raise your head. You as a leader need to look at your overall diversification, lending diversification strategy. If you don't have one, then you need to define one. And it needs to become a holistic approach, not just a specialized division to say that we do it. It needs to encompass everything you do as an organization and just naturally be a part. So that requires a massive paradigm shift for a lot of lenders in today's mortgage markets. But once they get through that strategic design and planning process, it's going to be far easier to implement, and they're going to be able to serve so many more borrowers within the communities. And I really like what you said about how you approach one market is going to be very different than another. So you need the data. You need the data to understand how is it different, and then what should our approach be accordingly. You can't just, yeah, it's got to be a holistic approach. I just love the way you framed all that up. I mean, it's invaluable insights and perspective on how we need to be thinking about this in order to capture that 77% of the marketplace that's coming available for lenders. I mean, it's astonishing. Did I summarize that okay?
Yeah, perfectly, but I'm going to give you another number. So that 77% in formation, even without a change in the status quo, that our latest forecast over the next 5 years, diverse markets are going to add $2.3 trillion to the purchase market. And that is if nothing changes. I have this wonderful chart that shows the gap. And if you think about, here's the home ownership rate for non-Hispanic whites, here's the like average, for all, and here's, unfortunately, Black home ownership rate is almost always the lowest. Hispanic is right above it. Asians is quite a bit higher. But if you think about that gap, that is that additional opportunity just because of pure household formation. I mean, that is tomorrow. And so when I do these analyses of these markets that I call the tale of two futures. And for example, I did it for Columbus. And you say, okay, here's what our forecast looks like. But here's what our forecast looks like if we reduce the home ownership gap by only 5%. The numbers are staggering. And what I enjoy about that is when I'm talking to the groups, I can quantify that in two ways. One, I can, for the lenders in the room, I can say, oh, that's, going to be additional $3 billion in Memphis. But the other side of that is $3 billion equals 3,500 families. And so you start using common, words that work for different types of organizations. And over time, what I love is that I start hearing them talking the same. That, like I'll give Fifth Third credit. They have a great saying, or I don't know, it's not a slogan, but they say a family, not a file. Like I love
Yeah.
that. And I think that's very representative of the transition that I see happening, that once you give people tools, and once they realize that this diverse markets doesn't mean not being profitable, and they get the sense and they see the help, I feel like that's when they go back to, sort of the reason the industry is here in the first place, and that's putting people in homes. And I see that kind of that shared sense of purpose, and that's the most fun. And it
Yeah.
really, really does happen.
Yeah. I thank you for that additional color because it is spot on. And I I hate to say it, but somebody taught me a long time ago, out of every bad, there's good. And maybe one of the good things that comes out of this particular down market, this trough that we're in, is that people start to refocus on really why we're here and what we do, which is it's a family, it's not a file.
Yeah.
And I just love that. Love Jay Plum for those types of quotes. The guy's brilliant, and I'm glad you brought that up. Okay, so now that we've identified what really is the problem, where the gaps are, where the challenges are, you've already started to kind of hint at the fact that the only way you can really strategize around your diverse lending efforts and strategy is if you have the data. You have to have data in order to really understand what's happening, where the trends are, where the opportunities are, in order to put families in homes. And so when it comes to, and I mentioned in the bio that market intelligence software providers is a growing segment in the mortgage banking industry. So as these providers are taking vast amounts of data that's available and then representing them, if you will, in a useful tool like what you guys do for lenders, for identifying those actual sales opportunities, what advice do you have for lenders who are looking at wanting to acquire these kinds of sales data analytic tools? What should be the pillars of their decision-making process to select an effective tool? What advice say you?
I think the first piece is that, like when we talk about comprehensive, there's a couple points to make. One is, and you said it really well in the bio, we have to look at all the time frames, and this is going to be kind of esoteric, but at all times we are our future and our past, right? Markets are the same. Like who we are today influence who we are tomorrow, but who we are today is also influenced by what's happened to us. Markets aren't any different than that. So I think that a really key piece is to bring all of that together. We have to know our past so that we can see what we've done, what opportunities we may have missed. We have to know our future because that's the world we're operating in today, but we have to know where that future is headed so that we can do the things we need to do for that future. So that would be my first piece. The second piece is, and you said it also well, macro to micro. is really important because, we talk a lot about the US mortgage market. And I always kind of smile internally and I think, you mean the 84,477 census tract markets that actually roll up to that US mortgage market. And even though we might be seeing similar trends, I can guarantee you that's what's happening in, for example, the Whitehall neighborhood of Columbus looks very different than what's happening in Des Moines and what's happening in Los Angeles. So that is why I think, you can look at things, and we have um, this, we call it the upside down triangle because it's really, really, really sophisticated. But it's our approach to data. And we say you quantify, you compare, you prioritize, you focus, and you act. At the beginning, that quantification, that's where you start at the macro level. You want to say, who are we? Like, what is our footprint? Who do we want to be? What's our why? And then you start comparing different pieces of that footprint. Yourself, you compare yourself, in one market to yourself in another. You compare yourself against your peers. And then you compare a market to the industry and you see what gaps are there. So that's the comparison. And that at that point, when you start seeing, where are things growing, you see what your strategies are, then you prioritize. And that's still, I would call that the macro to mid macro. But when it's time to focus and act, that's where you really have to drill down and have micro data. And that's where when you really take the future looking data and you take the very tangible tactical data that loan officers and industry players are used to using, and you use them to execute in a strategic manner. So I think those are the two big things. I like to think that although I know firsthand how complicated it is, the other thing I suggest is looking at comprehensive sources. So there's past, present, future, but then there's also demographics, like sales and recruiting and competitive data. There's partner data, like on realtors, builders, and then that whole big community data piece, which is the one that we've added, pretty uniquely. And that's who else, as we look at the changing world, is involved in the homeowner journey and in communities. And that's when we started adding places of worship, because in particularly, we see the big impact of those relationships on the Black communities. We've seen a huge impact, again, in no way am I trying to lump, but I mean, the reality is it is a big deal. Relationships of community development centers and, organizations that are focused on community. When you are a minority coming to a community, that becomes your community. And so by connecting with different types of partners and knowing more about that, you became more comfortable and more well-versed in making a community focused, I love the words you used, holistic set of strategies.
Yeah, I mean, I love what you're saying, and I think that to boil that down, if I could, or attempt to, what you're saying is, if you're looking to acquire a market intelligence software where it's going to really help provide you some data analytics, it can't be one dimensional. It's got to be a three-dimensional software platform that provides you the tools and the key insights, not just static current data, but also the trending data of where the market is, a particular part of your market or census tract is going, so that you can plan and strategize accordingly. And it's got to have some of those nuanced insights, like you said, like places of worship. So I know where to target, to start building relationships so I can bring value to that community. You can't, if a lender is going to choose a market intelligence software, they've got to make sure that it has those kinds of features and functions and capabilities that empower them to make a more prescriptive approach to their strategy in the market that they're going to try and grow and serve. Did I summarize that okay?
I mean, I think the impact of that is, I mean, we see this a lot, when someone says, okay, we want to improve our diverse marketing, the usual first thing people say when they look at it, let's say we help them find a problem area, which almost everyone has, you know,
Yeah,
they say, oh, I just need to recruit more, people of color. Okay, there's some truth to that.
sure.
But you can recruit the right people. But if you don't have the right product, it doesn't matter how many connections they make. It really doesn't. And then they can say, oh, well, I guess I just need to have the right product. Well, we just need to have a no 0% down, DPA that does X, Y, and Z. But then you don't have anyone that's delivering the message effectively. You're not talking about financial literacy. Then you have a product that doesn't work. And then the last piece is you can have sales and you can have a product. If you're not invested in the community and you don't understand it, those aren't going to work either, because these are strategies that are not just for now. There's a short term, there's an intermediate term, and then there's a long term play. And this is very much a long term thing. So think about, there's a huge number, and I'm sure you've heard of mortgage ready households. Well, there's
Hmm.
mortgage ready households, there's near mortgage ready households, and then there are households that are not. They're probably 2 to 3 years away, with the right directional help, that will be mortgage ready. You're working with communities and you're helping people along that timeline. So it isn't something that you can see results with right away. But if you're not thinking about that community, they're going to see right through you, because
Oh,
that's what communities can do.
I
you know,
and you only get one shot at going to that market,
you
so
do.
you've got to be sincere, and they've got to know that you're invested in their market. You're not there
Right.
just looking to hawk loans. I think we need to get away from the transactional mentality and get more toward the relational mentality. That's a long
Yes.
that underscores everything you were saying, which is it's a long-term approach. So don't go out
Right.
and lenders don't go out and buy a data analytics tool unless you're committed to making it a holistic approach and you're committed to the strategy that's required in order to really leverage the data, which kind of feeds right into my next question, which was, having consulted hundreds of mortgage vendors on their strategy to ensure their tools are not just bought because it sounds exciting, but they're actually using it. I can't tell you how many vendors I hear the story and over that they signed X lender, but then 6 months later they're so frustrated because the lender isn't using the platform. They aren't getting any ROI out of it. So, with that said, what other critical pieces of advice do you have for lenders to make sure that they're getting the most value out of these data analytics tool? Before we started the podcast, I know you touched a little bit on change management, so maybe you can expand a little bit more on that. What are those key tools to making sure those key strategies to making sure that these kinds of valuable tools like an iEmergent are successfully adopted and utilized?
And I think you're spot on that it is a big challenge, and it's been a learning experience for us. That's for sure. I think that, especially when you're talking about diversity, I've seen a clear and critical piece of this, and I think in any change, is you have to quantify the reason for the change. What's the why? And so one of the reasons that we bring in the forecast data is so that there is a business case why that everybody understands. And for a company, because we understand profitability, we try to define the actual size and market opportunity. So that's make people see why, what's the benefit of doing this.
Mm,
The other piece is to make sure leadership is engaged. So it works the best when there's buy-in by the leaders. It doesn't mean that the leadership is in the tool. It means the leadership is a champion for the tool. And the leadership is who communicates the why. We're doing this because we're going to see this value. Let's go, everyone. Like that, build that momentum. The third thing is that it doesn't like any of a strategy. It can be hard. You may not use it the right way first. You have to take time. And again, part of that's our job as advisors to help them find out and hear what they want to do and set it up so that the right people are using it and that the right people use the right pieces first. I mean, that was our biggest area of learning. When you have a really wide range, a tool that can work on a lot of issues, I used to teach everything like that first time, and I had people not have any idea what I just told them. So I got fired from training, basically. And Bernard started listening much better, and he started saying, okay, what are the 3 critical things you need to learn how to do? So we would think about what the company was doing, who the user was, and what they needed to know first. And so we started training that way. And once there is like a vision or a glimpse of the value in one thing, then they start saying, hey, well, could I do X with this? Oh, could I do Y with this? And that's how we see that snowball impact. And
Mm,
it requires a lot of back and forth, them saying, hey, could we do this with it? And it requires us going back to, leaders and just every user and saying, hey, have you thought about doing this with it? Um, in our development process, we are really, really, really tuned into what works and what doesn't. And our first round with Market Smart was in 2016, and we did exactly the wrong thing. We built what we thought was needed, and oh boy, it had bells and whistles, and nobody knew how to use it. We did. That didn't exactly help us. So when we built Market Smart the second time around, we built it in a really iterative way with, you can ask any of our clients, they can go in and be like, oh, that was my idea, and I see it there. And that kind of communication,
that's cool.
is two-way. So we have to listen, but I suggest to anyone who's looking at a software platform that they don't be quiet about, hey, can it do this? It would be cool if it did this, because that's how we can build the perfect thing, and anything is most of the feedback we hear from all users and all institutions is really common. There's different strategies, but their needs are pretty similar. So I think we live in a world where people think their voices can't be. I would say in this case, they need to be very loud with their voice.
Oh, I love that. That is just invaluable advice for any lender out there looking to leverage a data analytics platform like iEmergent. You got to make sure, I think that's critical advice, is you got to make sure that you're engaged. You can't just look at the data and go, oh, this is cool, some of my people will get it and will increase sales right away. No, you got to be engaged in the purchase and the acquisition and the adoption, and you've got to have a vendor partner that is there listening with you and working with you. Too many times we have vendors who just sell it, and that they're looking to hawk software, sell software, as opposed to really working and being engaged with the lender. That's where we've always had a great synergy with your team, is you guys
Yep.
take this consultative approach, which we're partly in the business of doing too, is consulting lenders on multiple other strategies and et cetera. But that's what I love about your guys' approach, to make sure there's successful user adoption and understanding of the why.
I mean, I think you can tell when I talk that I care about the issue. So I don't think our lenders ever wonder if I care whether they get what they want out of it, because, and I have to give a shout out. Bernard gets so many comments. We work with some national lenders, we work with some smaller lenders, and, I have emails from him, because he's really a rock star with a lot of support, where they say, you make me feel like I'm your only client. And I think smaller organizations don't feel that way. I mean, we're small. We don't feel that way. We feel like we're little and nobody cares a lot, and I'm just not going to let anyone else feel that way. It's really
Yeah.
important to us. So
Well,
it
maybe
takes an
small,
effort,
but
but you're right.
yeah, small but big in value and service, and that's really what matters at the end of the day.
It does.
Um,
It does.
so I just love this. Okay, so I don't usually venture out more than 3 questions, since the longer someone is in the shark cage, the better chance they have of getting bit. But I have to ask, to bring our conversation full circle, how is iEmergent helping lenders? I mean, we've touched on it in a lot of ways, but Can you summarize how iEmergent is really helping lenders with sales opportunities today and helping drive diversity in home ownership?
Sure. I think that, at the end of the day, high level, what we do, like someone said, fundamentally is we help people deal with change. Change is hard. And people, and especially in this diverse market space, there's a lot wrapped into it. There's a lot of, there's guilt, there's frustration, there's a lot of different feelings. And so we try to use a common language, multiple common languages to quantify what it means to change. So that I think is just like framing it in the big picture. Then we
Mm,
want to help people move from the old way, that status quo, to what you said so perfectly is the new paradigm. Once we get that done, though, in a much more uh, like how actually do we do it way, and I could give, and maybe I will when I'm done, some really neat examples of how it's being used because our lenders are the ones knocking it out of the park. But at the end of the day, what we do is our by having our forecast data, we encourage people to look at where the market is headed. So imagine a heat map, and I think you've seen our maps. And those are like, and I don't like to use it, but they're the hot spots. So you put on your
amazing.
loans on top of the heat map, and whether that's, today's heat map, tomorrow's heat map, but you look and you see where you have what we call gaps in coverage. Once you find your gaps and you quantify what that gap means, because a gap can be, you can still be there and just not have the share you want. So a gap is whatever you say it is. um, Once you define that, though, that's when we start to look more like some of the other platforms. We have data to help people recruit. For example, if you see that you have a gap in a particular market, that is very much a minority driven area. Our tools make it really easy, not just to see who the top loan officer is in Chicago, but we can drill down all the way to a census tract. But you can get and say, okay, well, I want to look at all the loan officers in Chicago, and I want to see which ones have the greatest penetration or the most percentage of their own business in majority and minority tracts. And you can do that again for a neighborhood or all of Chicago. And so by doing that, we're reframing two things. One, we're telling people to take action where there's a hole, in the context of the opportunity. The other thing we're doing is we're trying to help people reassess what it means to be top. We always think the one who does the most. Just like, what's the top market? The one that has the most. No, top in the situation of stress, it's the loan officer, realtor, market that is the best fit with what strategies you're trying to do are. So we do that. So we do that on the loan officer side. We same thing with the realtors. One thing we have that I think is unique is we don't just have the realtor rankings. We actually allow, and this is with the loan officer transactions too, the complete raw data. So it does expose a lot, but it allows people to not just use the rankings, but the properties. So we have some lenders who have done fantastic jobs taking new listings and talking to their loan officers about value proposition. And they say, okay, why would you call this realtor on this property? Well, then they look and they say, well, what's unique about us? And they'll go to that realtor and they'll say, hey, 200 Forest Street, did you know that we have a grant program that would be really incredibly
Oh,
helpful with a property like this? Well, even though that's a listing agent, that starts the conversation. And I've heard one of our lenders in DC said 30% of their new business was coming from this. Another, it's just at the Mortgage
wow.
Collaborative, and I'm going to shout out First State Bank in Detroit, not a huge lender. They had this incredible realtor campaign. I mean, it was just amazing. And they got like 12 new relationships, like in a week. Because they're being targeted. I can't tell them about their markets. They know that, like intuitively.
Sure.
They're utilizing the data, understand their value proposition and being strategic. Um, then the last piece is, obviously there's those centers of influence, which we like to talk about, kind of that same concept, who are the um, church, who are the places of worship, the schools, hospitals, what ideas do you have? But there's, we have market share. So you can look at product fit. How are the best competitors in the markets you're doing? What are they using? Are they, heavy FHA? Do you have an FHA product? And then the last piece that is actually, I think, the last piece that people use Like this is like later in the evolution is how do I use forward-looking data to set goals? Because one thing we've learned about change is people don't like to be told you need to do
Mm,
more. They don't like to be told you need to do 2% more. They like to be told your goal for this month is 4 more loans than you did last month, or quantify,
yeah.
you know, and that's where the forecast comes in because you can't set goals that are really just reflective of last year. You really have to set goals on where the market's headed. And I call that the
Oh,
most sophisticated use.
that is tremendous. Tremendous. Folks, you heard it here. I mean, there's loans out there, there's opportunities out there, and you just got to have the right tools to be able to lead you to, the path, the strategy to be able to capture those loans. Laird, I want to thank you. This has been extremely enlightening for me, and I know our listeners. And I know as a preferred partner, our team has really been impressed with what you guys are doing at iEmergent and really enjoyed our discussion today. So I want to thank you for jumping into the shark cage with us today, Laird.
Well, I could stay another 2 hours if you want me. You got to kick me out. No, in all seriousness, I appreciate the opportunity. I love to talk about this, and I hope whether it's our data or someone else's data, I just hope lenders don't give up on this issue because it's a win-win-win for so many, and it's hard. And don't think like
A-
so many
Amen
things
to
are
that.
out there,
And I
you
think that
know.
it just underscores I think your message right there just fully underscores the need that they have to start acquiring tools like this today because it's going to take time to learn
It does.
and then map out your corporate strategy. So when the market does come back, it's already embedded in your corporate strategy. And you've already got a team of folks that are already using the platform to help encourage other team members. And then you'll really be able to capitalize on the next market when it starts to swing back because we know it'll happen.
Always
Folks,
does. But can I
yeah.
write that down? You said that perfectly, Keith. I love that you recapped it, better than I ever could. So I appreciate that.
Hey, my pleasure. It'll be on the recording. So,
Okay.
folks, don't hesitate to learn about what our preferred partner, iEmergent, Laird, and Bernard and their team are doing to help lenders today by checking out their website. Go to www.iEmergent, IEM as in Mary, ERGENT.com. Real simple. Folks, until next time, this has been another exciting episode in the Shark Cage. Thanks for being here. We'll talk to you soon.
Thank you for joining us in the Shark Cage. To be a guest on a future episode, send an email to info@blackfin-group.com. To find out more about the show or the information provided in this episode, visit BlackFin Group online at www.blackfin-group.com.